nothing's happened. Oh, there it is. Sending data, sending data, sending data. Cool beans. Did it. Woohoo. All right.
Do you feel better that I let you figure it out while I was on the phone with you?
Yes and no. It's going to take me a few more times, but I kind of get it.
Completely okay.
All right. Thank you, and I'll chat with you later.
All right. Bye, Dodo.
Bye. Okay, and that's not the right one. Here it is, YouTube right there. All right, good. We are ready to go. All right, so Restream is working. Cool beans. And there we go. Right there. And we are almost set. All right, we're all ready to go. All right, what do you have for us today, Asder? All right, what do you have for us, Asder? How are you? I'm going to have to read away here with the 10-minute trader on TikTok because I don't really have anything to go by other than me just standing here. All right, that being said, you don't want to see this. You want to see that right there. Right. Okay. Mary June, good evening, and how are you today? Big Brain wants to take a look at STLA. Now, Big Brain, I have no idea what STLA is. So, STLA. Now, I've been trading long enough to know if I idea what it is, usually it's going to be a no. Stellantis. Okay. Well, here we are looking at Stellantis. Okay, well, we have the high right here about a year ago. We have the bottom right here last week. Okay, it drops, goes sideways, drops again. Now it's turning around, going back up. Is this the point where she turns and goes back up? Don't know. Well, let's find out. All right, so wait, before we go any further, it's at 936 at the moment. The bid's 909, the ask 975. But let's go by the last trade. Last trade was 936. So let's look at the 950s because that's closest to 936. The 950s for this week is 10, okay, more than 1%. This one right here is also going to be a little bit higher. Not by much, but this week looks a little bit better. All right, well, let's check the numbers and see what happens. Okay, Naples, Venice, how you doing? Gary Collins, Andrew, Bruce, Liz Luna, good evening. Felipe, Gary, Tony, what's going on? All right, a year ago, Stellantis was at 27. Okay, drops, goes sideways quite a bit. Look at the last 90 days. The last 90 days. Okay, here's your high, here's your low, here's where it was, here's where it is. Look at this. Up, down, now it's going up again. Now that's the last 3 months. So the last 3 months will give us a good idea what other investors are thinking. Okay, fine. Here's the bottom right there. Is it bouncing off and going back up again? Can very well be. Okay, now, before we go on any further, I'm going to ask you guys very politely. Number one, I do answer each and every single question. Every question I will answer. Okay? Please only ask the question once. And when you ask about a stock, make sure, Tim Bex, make sure the stock you want me to look at has dividends. Amazon does not have any dividends. Okay, this is a dividend investing channel where we invest in dividend stocks for weekly cash flow. If it doesn't have any dividends, it makes it a little bit more difficult to figure out where it's going. And if we have no idea where it's going, well, how are we going to trade it successfully? Now, don't get me wrong, Amazon may be a great company for capital growth. No, when you buy it in 10 or 15 years, yeah, it's great. It's not what we're looking for here. What I'm looking for here is weekly cash flow. It means I want to get a check every single week. Mary June, I'll let Jacob know that you said thank you. I'm sure he'll appreciate it. Javier, good evening. How do you deal with your emotional aspect of trading when you start to erupt? Okay, number one, I really don't lose my temper anymore, so I really don't erupt anymore. Because, as you get older, you get what's called wisdom. Something you can't buy. You cannot buy wisdom. You have to earn it. The only way to earn it is through life experiences. So, Javier, 50 or 60 years of doing something and getting frustrated with it, you learn, say, all right, this just ain't working. I'm not going to do that anymore. All right. Well, that being said, when I do a trade, it's a simple in, out, thank you. I'm looking for a profit. Now, Javier, I do a simple trading strategy called a covered call. Andrew, how's it going? Called a covered call. That means I'm buying a certain stock, making sure that it is profitable, and then I'm selling it to someone else. I have already in mind what I'm looking to gain from the encounter. I'm looking to gain 1% per week. Andrew, please just do it once. I appreciate the love. Thank you very much. Okay? Let's just, once or twice is great. That's a little bit too much. Thank you. All right, Andrew, thank you very much. Okay, so keep in mind what your goal is. Because if you're focused on your goal, that's the only thing you're going to see. Distractions are what you see when you take your eyes off your goal. So if my goal is 1% per week, if I buy a stock like this and it shoots up and somebody else makes that profit, well, I'm happy for them. Because I have my goal in mind, and my goal is 1% per week. How did we go from 150 down to 55? That's crazy. Is what it is. All right. A1 steak, put it in the microwave. Okay. Good evening, John. Oh, what other questions did I miss? Who do we have over here? Colton. How you doing, Colton? Rowan Clements. Right now, I have to go to the same time as I have to go home. Okay, Rowan, thank you for that. Colton, good evening. Logan, good evening. Jacob, good evening. Do a backflip. Yeah, that ain't happening. Okay, I'm a little bit past down. Don't get me wrong. I can still do handstands. I can still walk on my hands. I can still do cartwheel and roundouts. But flips, I'm not doing that anymore. Sorry, because when you get to a certain point, if you miss, it takes a little bit longer to recuperate. Right, so no, I ain't doing no backflips, but thank you. Jacob Johnson, how are you doing today? Richard Wimp. Okay, Crypto King, how you doing? All right, Javier Nunez. I just lost $14,000 in trading for one day of a bad mentally emotion. What do I do now? Well, learn from that, brother. Okay, if you do something and you notice that it went wrong, write it down, put it on a big piece of paper, hang it on your wall somewhere to remind you never to do that again. Because people can say, hey, don't do this. Hey, don't do that. Hey, this is the best thing for you to do, in my opinion. Or, hey, this is a good idea. But if you choose to do whatever it is you did, and you lost all that money, whatever reason it was, well, that's a learning process. Granted, a little on the pricey side, $14,000. Okay, well, don't do it again. It's actually that's it. You can't undo what you did. The only thing you can do is learn from it. Okay. All righty, Scott. Scott, what do you got today? What do you want to look at today, Scott? Let me know. Let me know in the chat so I can take a look. Okay, that's there. Okay, what else do we have over here? A1 steak, put in the microwave. Yep, good evening, John. Good evening to you. Good evening, Laura. Thank you for your help. You're welcome, Laura. Luigi wants to take a look at Dell. We'll take a look at that in a second. Dell and then Macy's. All right, Dell. Dell and Macy's. We've got Kohl's and CVS to take a look at also. We'll take a look at that one. Laura, I love Macy's. I do. I trade it almost every single week. If you take a look at my trades from last year, almost every single week I traded Macy's. All right. STLA. We haven't finished up with STLA. Okay, we haven't finished with that yet. We're just going through some of these questions here. ENB, Enbridge. Isn't Enbridge always a no? Because I'm pretty sure Enbridge doesn't have dividends. So it makes it a little challenging. Okay, Mary June wants to take a look at Kohl's and Campbell Soup. CPB. All right. Enbridge, ENB, IFN. L. What is IFN? IFNU. Well, if I offend you, then you shouldn't be here. That sounds terrible. Anyway, Okay, so Stellantis. Let's look at the last 30 days and see if that makes sense. All right, well, the last 30 days, okay, the 15th of March was on a Saturday, so we really can't look at that. Okay, we'll look at the 30 days ago, we opened up at 1244. We went a little bit higher the very next day, and then we tanked to find last Tuesday, a week ago, to be the bottom. Okay, we're slowly going up, which is always a great thing, because you make most of your money buying low and selling high. Okay, I don't understand why people want to buy at the high or mid. Well, why not just buy it at the bottom? Because you have profit taking. When a stock goes up to a certain point, people say, all right, hey, I made money, let me take it. Because here's a few things that people have a tendency to ignore. Number one, it ain't a profit until you take it. It just doesn't make sense. It's not a profit until you take it. Plain and simple. Jay Gatling, how are you doing today, Mr. J? Mr. J is in the house. I can see if we can get Facebook up and running. Okay, LinkedIn. I don't even know if LinkedIn's going to let me live broadcast on LinkedIn. Continue. Alrighty. Alrighty. Uh-oh. Uh-oh. I don't know if I can do this right now. And wrong username. Well, that's going to be a tough one then. All right. Let's keep on going. Bill Lamb, how you doing? Mary Schaefer's, Tony Perez, Dr. Williams. Good evening, good evening. All right, so that's being said, moving along. So Stellantis, top, bottom, now she's going up 936. The 950s is going for 10 cents a share. And 10 cents a share on a $9 stock, that's over 1%. Well, I'm looking for a simple, safe, predictable. Oh, yeah. No wonder why. I got the wrong password in there. All right. I'm going to have to deal with that one later then. All right. Here we go. Let's do one quickly on Stellantis. This week, we want to do the 950s. Okay. Covered call right there. 950s right there. One contract. Now, if you can afford 5, 10, 15, 20, fine. More power to you. Okay, I'm just showing you one and see what it looks like. Because if it makes sense, it makes sense. Okay, here it is. Buy one covered call of Stellantis. STLA. I'm tripping over the damn wires. You figure I'm here every night, I wouldn't trip over the wires. Yeah, I got to get my broadcast room a little bit more organized. Okay, by one covered call, STLA, Stellantis, 100 is the weekly, 17 April 25. That's this Thursday, because there's no trading on Friday, but this Thursday. The 950 call option against the stock at the market to open, 2 trades, buying stock, selling option. That way, it is one of the simplest, one of the safest trades that I know. Okay, so profit $29. I know it's not a lot, but it's only costing $9.21. So let's take out the calculator to find out exactly what kind of rate of return that is for 2 days, because we have 2 days left: Wednesday, Thursday, and that's it. Well, if the numbers don't work for this week, maybe it'll work better for next week. Someone had something. Okay, Uger Iton. Okay, you want to look at EPD? We'll look at that in a little bit. All right, it is on the list. We'll take EPD. EPD. All right, I'll take a look at it in a little bit. All right, John, how you doing? Nick. All right, so let's clear this out here. $29 is the profit. Remember, the maximum profit. When I say I want a simple, safe, predictable, consistent trading strategy, well, Simple. It's one of the easiest trading strategies there is. I'm buying a stock and then I'm selling it to someone else, all in one motion. I only got to do it once. So you buy the stock, sell the option, all at the same time. Well, that's pretty easy. You just figure out, where is the stock currently? Well, if the stock is currently at 936, well, the closest strike price is going to be the 950. So if I just buy the 950 covered call, okay, it buys the stock and it sells the option all at one time. And then I know exactly what I'm going to make, or pretty close to exactly what I'm going to make before I even do it. That's where the predictability comes in. I already know what I'm going to make before I do it. So it's simple. There's predictable, consistent. Well, this has weekly options. Now, weekly options, I can do it every Monday. Every Monday, I buy my stock, I sell my options. Then I get my 1% every single week. Well, if it makes sense, it makes sense. Why not? All right, so let's keep progressing forward. So, maximum profit, $29. What does it cost me? Cost of trade, including commissions and fees, $921. All right, so divided by 921 comes to a grand total of 3.14%. Now, 3% every single week comes to over 150% at the end of the year. Now, my goal is just 1%. This is offering me 3. So, do I like it? Maybe. Let me write it down. $3.1 for Stellantis. All right, what do we have next? Gotta get out of all this stuff. Back to the beginning. Here we go. All right, so big brain Stellantis actually doesn't look all that bad, but you still have the same questions plaguing your mind over and over and over again. Number one, do I like this company? Wait a minute. Number one is, does it make sense? Number two is, do I like this company? Okay. Number three is, do I want to own this? Living life. Mo, good evening, good evening, good evening. Still learning? Cool beans. Johnny B. Sativa, what's happening? Millhouse. All right. So if it makes sense, great. Do you like the company? That's a question only you can answer, because all companies are different. Do you like it? Are you willing to hold on to it? Those are big questions. Okay, so let's move on to the next one. The next one we have, Mary June wants to take a look at Kohl's. Uh-oh. All right, right there. Hold on. Right there. Mary June wants to take a look at Kohl's. Now, I do own some Kohl's. I don't own any Stellantis, but I do own Kohl's. Let's take a gander at some Kohl's. Pam Seals, how you doing? Chef Henry. La la. La la. Dipsy. Tinky Winky. If you don't know who those are the Teletubbies. La la. Dipsy. Okay, here we go. Here's the high of the year. Here's the low of the year. Here's where it was. Here's where it is. Look at the motion. Up, down, up, down. What's going on here? It's still going down. Okay, is it new low? Don't know. Well, let's take a look at it. Laura, good evening. Thank you for your help. You're welcome. Luigi wants to take a look at Dell. Dell is on the list. We already did that one. Macy's, okay, great. Hawkbird. Anything for Oracle? Hawkbird, we'll take a look at Oracle. ORC. O-R-C. Wade, how you doing? Timothy, how you doing? JMS, cool beans. Sean M, good evening. Coyote Kyle. Matt Hankins, good evening, everyone. All right. Kohl's, let's take a good look at it. I do own some, and I believe I have mine at 16, I believe. All right, a year ago, Kohl's is sitting at $22.90. The high of the year is around $28.42, and that was in the middle of May. It's nothing drop all year long. Look at the last 3 months, the last 90 days. High, low, where was it? Where is it? Look at the motion. Up, down, sideways, down, sideways again. So basically, we're here for the last 2 weeks. We're just kind of going sideways. We're at 626. I'm into this thing at 16. How do you think I'm feeling? 16 is not even on this chart. 16 is way up here. Okay, this is 14 right there. 15, 16. Yeah, 16 is not even in my screen. Anyway, besides the point. I'm still getting a cash flow on a weekly basis from Kohl's. Okay, so let's take a gander. The last 30 days. 30 days ago today, we opened up at 811. A week later, there's the top, 962, and then she dropped. Looks like we have some pretty good bottom here. 604, 608, 608, and today a 616. Okay, so that's a pretty good bottom right here. Can it go lower? Yes, it can. Is it going to? Don't know. Okay, now I already own Kohl's, but it doesn't look like it's a good idea to start jumping in until you find the bottom where it's going to turn around and go back up again. But let's just leave it alone for now. Kohl's, it does not look that appetizing, so we're going to say no to Kohl's for this week. Mary June wants to take a look at Campbell's Soup, CPB. CPB. Campbell's Soup. All right. The high, the low. Where was it? Where is it? Look at this. Up, down, up, down, up, down, up. All right. Interesting. What's going on here? Looks interesting. 37.72. What's the closest strike price to 37.72? Would be 38. But this week going 20 to 35, so it's no for this week. But there's only 2 days left for this week. So let's look at next week and see what that looks like. Last trade, 37.72. The 38 is going for 25 to 60. No. Sorry, kiddo, the number just doesn't look good enough. And look at what we're doing at the moment. Right there. Okay. Bottom is here, 36. Jumps up to 39. Now, 36 to 39 is $3, which is right around a little bit less than 10%. Okay, so profit taken today. Campbell Soup is not a good one to jump into at this moment, in my humble opinion. Not that I'm telling you what to do, Mary June. I'm just saying it doesn't look that good. Okay, down, up, down, up, down. All right, no. Today, big down, no. Sorry. Big Brain, ENB. Isn't that Enbridge? Now, before I even pull it up here, let's go over to Yahoo Finance and look up Enbridge. Now, the reason why I want to go to Enbridge on Yahoo Finance, reason why you should always have a finance, you should always have X financial website, which gives you financial website, which you have dividends. Okay, historical data. I want to see how well they've increased their dividends. Come on. We just got a brand new modem and a brand new, what do you call it? New router. New router, so this should be a lot quicker. So this should be a lot quicker. It's computer. Data. All right, come on. Come on. Can't you see enough? 84. Look at that. Enbridge paying dividends all the way back to 1984. All right, let's take a look and see if it's consistently profitable. Like I want 2 decades of profitable. All right, well, let's check it out. 2005 is 20 years ago. 2 decades, 20 years ago. 2005. May 12, 2005. 13. 12, 13, 14, 15, 16, 17, 16, 15, 14, 15, 16, 17, 18, 20, 21, 25, 26, 25, 24. This thing's up and down, up and down. 28, 32, 31, 30, 32, 31, 40, 39, 36, 35. Okay, I'm not seeing the consistency of profitability here. I'm seeing it go up, I'm seeing it come down, I'm seeing it go up, I'm seeing it come down again. So I'm not quite sure why you're so excited about Enbridge. Okay, it just doesn't look that. Holy cow! What was that one? Oh, take a look at this. 48, 48, 53, 52, backwards, 5. What the hell is that? 52 to 5? 56, 56, 56, 61, 57. That's backwards. So it goes up, it goes down, it goes up, it goes down. All right. So let's go take a look at the charts. It doesn't look that great. 56, 61, 57. That's backwards. So it goes up, it goes down. Okay, so we're going to take a look at Dell and then Macy's is a no. Campbell's is a no. Okay. Next on the list, CVS. That was from last night. We didn't get to it. Didn't get tonight. I'm going to say no to CVS real quick. Okay. Look what's going on. Bottom, top, down. Yeah, starting to come down now. Sorry, CVS. Next on the list, Dell. Interesting. High, low, was, is. Look at this. Up, down, up, down, up, down. Now she's going back up again. 85.49. Is there an 85.50? No, there isn't. But there is an 85 and there is an 86. Look at the 86. 126. The 85, 167. Okay. Well, let's take a look. Now, I don't have any Dell, but I do like Dell. Jabil. Michael. 179.70 is the double top back in the end of May. Then she drops back up, back down again. So let's take a look at the last 90 days, which is the last 3 months. Okay? High, low. Down, up, down. That's what it looks like. If it looks like a duck and quacks like a duck, well, that's going up. It's actually that simple. But remember we looked at this yesterday? We said 65 to 90 is a $25 jump. Yeah, 65 to 90 is $25, which is over 20%. That's a 20% move. So yeah, there was a little bit of a pullback today. Not huge, but still. The last 30 days. Okay, up, down, up. Today is a little bit lower than yesterday. Okay, yesterday's high, today's a little bit lower, so it doesn't look that appetizing. Don't get me wrong, I like Dell, but you get a big move here to here. So yeah, so there's a little bit of a pullback today. So not quite optimal to jump in today. Not quite. Kent McCabe, what's going on? Victor, what's going on? Okay, L wants to look at IFN. Now, EL, IFN, never heard of it, IFN. If I've never heard of it, not that it's a no, but usually it's a no. Has no options, so why are we looking at it? Okay? Tim Bex, Amazon, really, AMZN? AMZN. Oh, I'm going to say no to Amazon, look at that. Okay, 30-day high, down, back up. Now she's coming down. Simple. No. Okay, so Tim Bex, Amazon. Here's your 30-day high, your 30-day bottom. She shot up. Now she's coming back down again. As soon as she stops coming down, turns around, goes back up, that's the time to jump in. I don't do Amazon because Amazon doesn't have any dividends. Okay, the show you're looking at, the channel, whatever you want to call it, dividend investing for weekly cash flow. If it has no dividends, it's most likely going to be a no. Alrighty? So, Macy's. Macy's is going to be a quick no. Okay? 30-day high, 30-day low. Now it's coming back down again. Yeah, no. Sorry. Hey, it's actually that simple. Okay, you look for the motion, look where it's going. What does logic tell you it's going next? Well, if the 30-day high is here, at a high, people like to take profits. When the stock goes up, People take profits and the stock comes down. Well, came down. Here's the bottom here. Okay, last Wednesday she shot up, but now she's coming back down again. Okay, until she stops and changes direction, it's going to be a no. Now, we will take a look at Macy's next week. Well, 'cause I actually own some Macy's, so that's probably a good reason. Okay, IFN. IFN. I never heard that one either. IFN. No options. No thank you. EPD. EPD. Enterprise Products Partners. Limited Partnership. Well, I'm going to say no to this one because when you've been looking at charts long enough, you can take one, it takes 3 to 4 seconds to look at a chart and see everything that you need. Okay, so I'm looking for 5 things. The high, look at 1, 2, 3. There's your high right there. Let's call that resistance, means it doesn't want to go higher than that. Okay, fine. The low right there. Where was it a year ago? Where is it now? What is the motion? Sideways, up, down. What's going on here? Well, the bottom is there and it's up here. Well, from here to there is a big jump. More than likely, it's going to be a no. So let's zoom in. All right, here's 30 days ago. Well, I don't know. It doesn't look that bad. You know, looking at the 30-day chart, here's the high, here's the low. Now she's going up. So we have all this, like a week and a half going to the upside. Should be at 31. 31, no for this week, but 31 for next week, yeah. All right, well, let's take a look at 31 for next week. What does she usually do? Mike Peeler, good evening. Pedro Medina. Brad Trice, good evening. Raven, good evening. What does this thing normally do this time of year? Well, for that, we need the seasonality chart. Now, if you don't know what a seasonality chart, it's just what it sounds like. Seasonal. Winter, spring, summer, fall. Winter, spring, summer, fall. Okay? First quarter, second quarter, third quarter, fourth quarter. Okay? This red line represents 10 years worth of average movement. What does it normally do this time of year? Well, that's that. The blue line, well, that's this year. Look what happened this year. She went up, sideways, dropped down, then spiked back up again. That's what it did. The blue dot right here, well, that's today. Okay, what can we expect in the next couple of weeks? Okay, basically, it looks as if she's going to dip right to the middle of April, which is another week. Then she's going to go back up and then sideways and then dip again. Not the greatest movement in the world, but here's the thing. We don't need it to move a lot. We just need it to stay somewhere where it is so that we can jump in and make sure that we can get a profit when the profit is getting ready to be taken. Okay? So that being said, all right, back to where we were. Right there. All right, so what does EPD look like? All right, well, let's take a look. 30.93, right there. There's the current price, 30.93. So the closest strike price is going to be 31. 30.93. See, strikes right here. Strike price, 29, 29.50, 30, 30.50, 31, 31.50, so on and so forth. The way it looks right now, 30.93, 31 is going to be the closest. Well, 31, 17 April, this Thursday? No, it doesn't make sense. It's less than 1%. 25 April, which is next Friday, which gives us more time. Well, 31 is going for 37, which is over 1%. If you like EPD, Enterprise Products. Okay. Let's see what it's like. What's the number look like for EPD? Douglas, thank you for that comment there, Douglas. 31 right there. Okay, one contract of EPD at the market to open, and there it is. Okay, profit 51.50. What is it costing me? 3,000. 3,000 bucks to make 50. Well, I'm getting the 3,000 back when I sell the stock. So it's not that I'm losing it. It's just what kind of a profit am I making off of this? Hold that thought. This time of year, I need some chapstick. My goodness. Okay. 51.50 is the profit. Cost of the trade, including commissions and fees, 3,000 bucks. Okay, well, let's see what the calculator is telling us on this one. Calculator, here we go. 51.50 divided by the cost of the trade, including commissions and fees, 3,049, 3,049, and that equals a grand total of 1.68%. Now, does 1.68% excite you? Does it make sense? Well, Enterprise Products, well, do you like that company? Do you want to own that company and hold on to it until it hits your target? Now, I will buy a company and I will hold on to it for dear life to the day I die, consistently getting a cash flow on a weekly basis from it. Well, why else would I invest in it? Now, for me, I want cash flow from every single stock that I own. Now, I get 7 accounts and I share 3 of them publicly with you guys. I share all my trades. So you can see exactly what I'm doing. So maybe you can learn too. Or if you want, you can live every morning. Okay? Take a look at what is coming up this week. Because my goal hasn't changed any. It's simple, safe, predictable, consistent, 1% per week. That's what I'm looking for. That's over 50% per year. Now, if 50% per year is not enough for you and you want more, well, I'm terribly sorry. You're in the wrong place. And I hate to send people away because I'm here to teach people and share what I know. Oh, look at this. What is that, a dancing tomato on my head? Anyway, let's keep on going. So 1.68, I mean, that's not bad if you think about it. That's like 80% a year. Now, 80% a year is nice. And when's the last time you got 80%? Clear. Change that back to where we began. All right, here we go. Next on the list. Ooh, does that somebody want to take a look at IBM? Hold on. All right. Amazon, we did that one. Just Debra. Good evening, Debra. Calvin Hill. Aaron. Hard Lesson Friday. Bought Gap. Hold on. Let's pull up Gap. See what it looks like. Now, Gap is on my list. One of those stocks I do buy. Okay, Gap. Okay. You ready? High, low. Where was it? Where is it? Look at the motion. Up, down. Don't know what's going here. We'll have to zoom in a little bit tighter to see exactly what's going on. But interesting. Uh-oh.
And then slightly.
YouTube just got kicked. Don't know why. So I'm having an issue again with the modem and the router. Brand new modem, brand new router. Why am I having issues? I don't know. All right. I restarted again, so you guys on YouTube are going to have to kick in again. All right. That being said, Jay and Scotty over there on Instagram World. You guys have anything you want me to take a look at? Or are you guys just hanging and chilling and seeing what's going on? We're looking at the Gap at the moment. So, 5 things. The high, the low, where it was. Okay, what's going on? That's the important thing. What's happening now? Does it make sense? D, good evening, and how are you today? Thank you, D. All right, let's keep on going. Gap's at 22.44. The high of the year, 30.68. Okay, thanks, D. Very nice of you. 30.68 is the high of the year. Okay, the last 90 days, which is the last 3 months. Look at this. The high, the low, where was it? Where is it? All right, let's zoom in a little bit closer. I'm kind of curious. Aaron said he bought Gap at 2081. Uh-oh. Okay, I'm a little bit curious here, because what you're saying makes no sense to me. Thank you for that, D. 2-Bit Scotty. What's happening, 2-Bit Scotty? All right. Last 30 days. 30 days ago, we're at 20. Jumps up to 2250. Big drop right here to 17. Back up, back down. Okay. Let me see if I understand this correctly. Okay, now correct me if I'm wrong, Aaron. All right. Bought Gap at 2081. 2081. That must have been last 2 weeks ago? Last time it was at 2081 was a couple of weeks ago. All right, it hasn't been there all week. All right, so you sold the 1850 Monday. Why? Why would you sell the 1850 on Monday? Because look at where it was on Monday. Monday, she opened up at 19. Aaron, Monday, she opened up at 19. Or it was that last Monday. See, last Monday, that would make sense. Because last Monday, she opened up at 18 and went to 1956 last Monday. But this Monday, it makes no sense. Okay? I don't know why you did that. All right, anyway. Sold the 1850 on Monday. At 3:55 was 849. At 4 p.m., 1860, and it exercised. Okay, so Aaron, here's an interesting question for you. With it being so close to the 1850, now 1849 is pretty damn close to the 1850. Why didn't you roll it forward? Okay, it's not that difficult to do. Okay, you just right-click on the ticker symbol, and a drop-down window pops up, and it says create a rolling order. Okay, it's not that difficult to roll it into the next week. It gives you another week of time value, and it also gives you another premium, more money. Well, that's what we're doing this for, more money and more time. All right, when you get it set up, okay, yep, we did that one already, did that one already. Okay, so Aaron, other than that, you know, you're relatively new here, Aaron, okay, and it's great that you're coming and you want to learn and you made your first mistakes. Okay, why not just join the morning trading group? For the money that you're paying, you get to get in-depth answers so you don't have any losses. Well, that's why people join in the first place. Because apparently, from what you're saying here, you are so close. 355, it was 849. Yeah, that's a little close for me. Just roll it forward, and you wouldn't have had that issue. All right? But, you know, it is what it is. Steve! How's Dell? Hey, Steve, we already looked at Dell about 15 minutes ago. Live Logically. I like that name. Live Logically. It kind of makes sense. Lunar. Money. Video game. Stocks are just measurement of rich people's feelings. Okay, Lunar, I'm going to disagree with you there. Because I'm just going to say no. Well, leave it at that. Darlene. Tracer. Good evening. Good evening. How are you guys doing? Hope so. Sinatra Capone. Gotta love it. Anne Shines Brigg. Oh, is it Anna? Sorry, Anna. Robert, good evening. Ed, good evening. All right, so that being said, Aaron, you know, that would be just a rough suggestion. Senan de Bitar. Okay. Steve Delaware looked at that one. Thank you, Steve. All right. Live Logically. Good evening. Joe Dirt. Good evening there, Joe Dirt. Goal is 1% growth overall per week. No, Joe. Goal is 1% cash flow. Okay? I'm looking for cash flow. I'm not looking for capital appreciation, which is growth. I'm not looking for growth. I'm looking for cash flow because I need to pay bills. Okay? Most people just go to work. Yeah, I've been doing that since 1973. I'm basically done with that. Okay, so live logically. How can I learn to trade? Well, you could come back here every night because I'm here every night. Charity Renee, good evening. But you can just join the morning trading group or buy books or try. It's not that difficult. Okay, live logically. What I'm showing you here is a trading strategy I created for my 9-year-old. When my daughter was 9, she jumped on my lap and said, "Daddy, what are you doing? Can you teach me?" Well, that's not something you hear from a 9-year-old little girl. Okay? That's 67%. Yeah, Joe, that is. I get that, Joe. 67% growth on the year. Yeah. And if you keep going, Joe, 14 to 16 months, you should be able to double your money. Okay, Uger Iton, PRU, Prudential, that's a monthly. That's going to be a no. Okay, yep, we already did Dell. And Morales, good evening, good read. Dr. Linda, good evening, Dr. Linda, and how are you today? Al, what's going on? Michael Wildrick, good beans, cool beans. Okay, yeah, so Joe Dirt, the goal, 1%, simple, safe, predictable, consistent, 1% per week, cash flow. So Joe, if I have $100,000 in my account, 1% a week is $1,000 a week. Now, when I say simple, safe, predictable, consistent, the 10-minute trader, okay, this is dividend stock talk, well, real angels. All right, la, 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 la. Okay. Interesting. Antoine, good evening. All right, Just Curious 72, good evening to you. Shaq Cree, good evening. If you own a stock, you can sell a covered call and sell the stock. Well, if you sell the covered call, you can't sell the stock until after the covered call has been expired. Cleveland Grant, ATIX, ATIX, never heard of it. Ozzy wants to do Apple. Okay, let's take a look at Apple. I like Apple. AAPL. Now, the dividends aren't the greatest in the world, but the reason why I like Apple is because it is on Warren Buffett's list. Yo, I came to predict to perfect place. Sahas, good evening. James, good evening. Dudley, how are you doing? SoCal, good evening. Robert, nifty, nifty. All right, so all that being said, what software do I use? Okay, Joe Dirt, this is not software. This is actually a trading platform through Charles Schwab. It's free to use. Okay, you can just download it free onto your computer. I don't get any commissions on it whatsoever. I don't get anything from anybody. It's not the point. The point is, I like this software because it's everything in it that I need, and I don't have to go from one screen to the other to the other. Okay, it's everything right there. I can make all my decisions on one screen. All right, Apple. Let's take a gander at Apple. Here we go. The high of the low. Where was it? Where is it? Look at the motion. Up, sideways, up, down, down. What's going on here for the last couple of weeks? Let's zoom in a little tighter and see what's going on. Sunny Bows. Rome. What's happening? All right, so a year ago, Apple is at 174. Bottoms out the middle of April of last year at 163. The high of the year is just by the end of December, 260. Now, the last 90 days, which is the last 3 months, okay? High, low, where was it? Where is it? Look at the motion. Up, down, big drop, back up again. Well, it's going up. That's what it does. Look at the seasonality on Apple. Now, what does Apple normally do every single year? Well, here's the last 10-year average. Buy it in January, get rid of it in December. It just makes sense. What I would do, more or less, buy it in January, get rid of it in February. Buy it in March, get rid of it in September. Buy it in November, get rid of it in December. That's what I do. I mean, look at the movement. This is what it normally does every single year. Well, this is this year. What is it going to do in the next couple of weeks? From there to here, basically just go sideways. Nowhere. No big up moves, no big down moves. It's kind of perfect for what it is we want to do. And what we want to do is just a covered call every week, week after week after week. It's simple, it's safe, it's predictable, it's consistent. And if you do it right, you can make 50% or more per year. Well, that's my goal, 1% every single week. Because my bills come due every week. Every week I get a bill for something. Credit card bill, phone bill, insurance bill, cable bill, water bill, electric bill. Every week something comes due. Oh, Darian Simon is asking an interesting question. Now, Darian, you're not the first one to ask this question. Let me break it down for you just a little bit, see if you understand. Before I do that, let me go over to YouTube and answer some of those questions. Yolox Tommy. Hello. Well, what do you think about gold movement? You think it will reject the bull run and come back down? Nick Gardner, hi. Okay, Suhas. I don't know how you pronounce that. Suhas. Suhas. Okay, whatever. I don't do gold. Okay, you can't make weekly income on gold. Not unless you're trading the commodity and doing it on a daily basis. Then you can do it. Okay, but it doesn't have, gold is based in my humble opinion, gold is something where you would store a value. You can't get cash flow from it. You just store the value. Okay, fine. However, gold futures, you can do trading on gold futures. And yeah, you'd have to sit in front of your computer watching charts all day long. And I don't decide to do that. So, sorry, I don't do gold. Sorry. Let's get back to where we were, right there. All right, so, okay, now getting back to what Darian have to say. Hold on. Okay, Trends Crypto. Slam, how are you doing? I have questions. Okay. Shoot. Okay, Trends Crypto. Let's hear what your questions are regarding dividend stock investing. Okay, not crypto, not futures, none of that stuff, just dividend stock. Okay, while you're doing that, Darian, where can you see how much a stock yield weekly? Now, Darian, I don't know where you got the impression that a stock is paying a dividend on a weekly basis. No. Okay, they have yearly, biannually, which is twice a year, quarterly, 4 times a year, monthly, 12 times a year. I don't know of any company that has dividends on a weekly basis. Now, when I say dividend investing for weekly cash flow, okay, dividend investing, that's one thing. We're investing in dividend stocks, and we're obtaining weekly cash flow through weekly stock options. Because weekly stock options, yeah, that's every 7 days. That works for me. Brian Spence, Macy's and Kohl's are not predictable. Okay, not quite sure why you would say that, but all right. Rajit Shavada, IBM, Cool Beans, Deeds. How are you doing, Deeds? Power Wagon, back again. Cool Beans. I must be doing something right. You're back every couple of weeks. Cool Beans. So, Darian, I hope that answers that question. I do dividend stocks that have weekly options. That allows me weekly cash flow. All right. Trends Crypto. My question is it possible SPX 500 come back stronger, more, and recover all lost within 3 months? Yeah, it's possible. That's your answer. Okay, you asked the question: is it possible? It is possible. Is it going? Don't know. All right. So Brian Spence, you think Macy's and Kohl's are not predictable? Okay. Now, we already looked at Macy's, we already looked at Kohl's, so I'm not going to look at them again. I'm just going to agree with you if that's the way you want to believe. You can believe whatever you want to believe. But I've been buying Macy's and Kohl's for the last 2 years, and I get a consistent cash flow from them every single week. So, is what it is. Yasuhas. Well, what about Tesla stock? I don't like Tesla stock because there's no dividends. Okay, the name of the channel is Dividend Stock Talk, or Dividend Investing for Weekly Cash Flow. The word that you need to concentrate on is dividends. Okay, Tesla doesn't have dividends, so I don't trade Tesla. If the Chinese BYD is boosting up like crazy, I was in China last year and it's growing crazy, and China will definitely take down some tech-wise. Okay. Now, that's not really a question. That's more of a statement, which is okay, because it's kind of hard for me to answer a statement. That's why I look for questions. Trends Crypto. Is it possible stocks are independent in future's biggest trade war coming? Okay, so Trends Crypto. Here's an idea. Here's the thought. Number one, there are companies out there that are over 100 years old. Now, nobody here that I know of, and if so, someone speak up, is over 100 years old and has seen all the crap in the last 100 years and how it affected the stock market. Point being, okay, a company that's been over 100 years old, they've seen World War I, which is worse than a what do you call it? A pissing contest, because that's what we're having right now. Hold that thought. At this moment in time, okay, this trade war, so to speak, it's nothing more than a pissing contest, because you have the whole world who are okay with business as usual. Now, I don't want to do politics, but I just want to simplify this as quickly as I can. You get the whole world that is pretty much okay with business as usual. And then you have some guy come in and say, oh, hell no, you're taking advantage of us, no more. Fine. Make everything fair. Make everything even. 0% tax all across the board. Well, that would be awesome. But some people don't want to do that. So yeah, there's going to be friction. But the friction that is here now is nothing, in my humble opinion, compared to World War I, World War II, Korea, Vietnam, the stock market crash of 29, the Great Depression of the 30s, okay, and then you had the crash of 87, you had the crash of 2000, you had the crash of 08, you had another crash of 2021, and then you had Afghanistan, you had Korea, you had the oil embargo of the 70s. You had so much crap going on in the world, yet these companies, there's a bunch of them that have been consistently profitable for 50 consecutive years or more. There's a whole bunch of them. I think there's 54 of them. But there's over 150 that have been consistently profitable for 25 years. That's a quarter of a century. 25 years ago, what have we seen in the last 25 years? Well, these companies are still consistently profitable, and they consistently increase their profits to their shareholders. So what you're saying about the trade war coming up, it's not going to be comparable, in my humble opinion, to World War II, World War I, Korea, Vietnam, the Great Depression. Yeah, if the company's 100 years old, 150 years old, and they consistently be profitable, I don't see where the issue is. Pick a better company. That's it. If you're worried about what's going to happen in the trade war, try to find a company that has nothing to do with it. Take Coca-Cola, for instance. Coca-Cola is an American company. They make Coca-Cola here. They sell Coca-Cola here. Now, they sell Coca-Cola worldwide, but they don't really need to. Okay, so let me know the final best buying price of gold for long-term investment, because I think right now I am a very late investment in gold. Okay, I don't do gold. I think you missed that part. Okay, because gold is nothing more than a dust collector. It's a paperweight. You put it on your desk and say, oh, don't that look pretty? You can't take a bar of gold and get a cup of coffee. No, you got to chop it up in little tiny pieces. Well, nobody can do that. It's nothing more than a store of energy, okay, or store of value. Anyway, I don't do gold. So dividend investing. So that means dividend stocks only. And gold is not a dividend stock. Okay, Rajit wants to take a look at IBM. Wait a minute, we haven't finished up with Apple. Let's finish up with Apple first. But we're going to say no to Apple. Let's take a look at this. 30-day high, 30-day bottom. She shoots up. Yesterday, made it high yesterday. Now it's pulling back. So no to Apple. Pretty quick, right? Okay, IBM. IBM. Okay. High, low, where was it? Where is it? Look at the motion. Down, up, down, up, down, up. Okay. It's in 240. Well, let's keep on looking. A year ago, IBM was at 184. The bottom of the year was in the beginning of May at 161. Then she shoots up nicely from 161 all the way up to 270. Well, that's a $110 increase in about a year. All right. So the last 90 days, right about there, okay, there's the high, here's the low, here's where it was, here's where it is. Look at this. Up, down, and up again. All right. Well, let's take an even closer look to the last 90 days. A1 stake. Trump did that. Yeah, Trump did a lot of things. Well, so did Biden, so did Obama, so did the Bushes. You know, you want to point fingers, point them everywhere. Okay, ain't nobody in the big chair innocent. What's your upcoming session live stream time? 9 p.m. every night. All right, Joe Dirt, IBM. Okay, last 30 days for IBM. Okay, high, low, is, look at this, sideways, down, and then up. But before you get all excited about the current upward motion, look at here, 214 to 240. That's a $36 move. That's about 15% from here to here. Yeah, more than likely there's a high probability of profit taking. Well, what happens with profit taking? The thing drops. Okay? Don't get me wrong. If you like IBM and you like it at 240, hey, more power to you. I just don't like the possibility of profit taking, especially when I'm jumping in. So if you're going to jump into IBM, plan on being there long term. Because if you jump in and it drops, which is a good possibility, you got to wait for it to turn around and go back up again. Okay, Nassar, good evening. All right, thanks. Nice to meet you. Trends Crypto, you have a great day, dude. Wish you the best of luck. You know, don't get me wrong. I love trading. I do. But I'm more of a predictable trader. I like consistency and profitability. All right? I'm not looking to hit a home run. I'm looking to get a single or double. That's it. Do you trade gold? No, I do not. I don't see any reason for trading gold. All right, let's keep going back to where we were. Old dog. Good evening there, old dog. Brian Spence. Macy's and Kohl's are not predictable. Okay. Shaq. Good evening there, Shaq. Good evening. So if I own a stock and need to sell a covered call and sell a stock, it doesn't work that way, Shaq. Okay, you can do one or the other. Okay, A1 stake, dude, come on. Let's stop being childish, okay? Okay, so, Shaq, good evening. If I own a stock and I need to sell a covered call and sell stock, no. There's two separate trades there. Buying the stock, which means you own the stock, which allows you to sell... to sell a covered call against it. Basically giving somebody or selling somebody the right to buy it from you at a certain price by a certain date. That's what a covered call is. So when you do that, you can't do anything with the stock. You just got to let it sit there and collect dividends. Brian wants to take a look at Whirlpool. Mary June, what do you mean not the Teletubbies? There's Lala, Dipsy, Poe, and Tinky Winky. That's all four of them. Gail, how are you doing tonight? Gail's over here on Instagram. Sam, how you doing? The Queen Bee. Powder Keg. Good evening. All right. Deed's Power Wagon. That's funny. All right. Not the Teletubbies. La la. Tinky Winky. Dipsy. What is the value of your stock price? Wait a minute. What if the value of your stock price goes up? Shouldn't you sell to capture the earnings? Angie. Hold on a second. Crypto is Big City 416. Crypto is a scam? I wouldn't necessarily say that. I would say crypto has its place. And yeah, eventually it would be nice to move over to cryptocurrency or to some kind of currency that doesn't have the bankers and the Federal Reserve's fingers in it. That's a great idea. But at this moment in time, it's not very safe and it's not very secure. That's one of the reasons why I'm not doing it. Another reason is I can't get a weekly cash flow from. There's no options available in crypto. Well, if I can't make weekly cash flow from my investments, I'm going to have to go back to work. Yeah, no. If I can stay home and get a nice 1% every single week to cover all my bills, well, why wouldn't I? That's what I'm doing. That's why I'm doing what I'm doing. All right, now, Angie, we've had this conversation before. Okay, what if the value of the stock price goes up? Shouldn't you sell to capture the earnings? No, not at all. See, we're not buying stocks for the capital growth. That means buying it and the stock price goes up. That's not why we're doing this, Angie. Okay, we've had this conversation before. If I like IBM, it's at $240. Great. I'm not buying the stock for the idea of it going up or down. No, I'm buying it for the cash flow that it gives me. Well, what's the cash flow? $240 strike price. This week it's $256, which is a little over 1%. Next week the $240 is going for, are you kidding me? $955? That can't be right. Okay, that's over 4%. Okay, Angie, I'm not looking for capital appreciation. I'm not looking for the price tag to go up. I'm looking for the cash flow that it gives me on a weekly basis. Should you sell it if it is done the covered call on it and has not expired yet? As long as the numbers work, Angie. If you jump into a stock, do a covered call, it expires worthless, and then the next week the stock jumps up, well, yeah, you could sell it and get that profit, or you could sell another call against it at a higher value, get that premium coming in, get that cash flow running, and if the stock is still going up, you still get the opportunity to collect that. Why get rid of an asset for a short-term profit? Yeah, short-term profit, when you can use that asset as it's growing to get higher and higher returns. Because as the stock goes up, so doesn't the rate of return on the covered call. So this week I might get 1%. Next week I might get 1.5%. The week after that I might get 2%. And it just keeps on snowballing and keeps on going. David G, what's happening? Mary June, already have them both. Alrighty. Gospel Truth, good evening. Shaq, hi. If you already own the stock, so you do sell a covered call and sell the stock. No, you sell the covered call and you can't sell the stock and the covered call at the same time. If you own the stock, you can do one or the other. You cannot do both. If you sell a covered call against the stock that you own, you can't do anything with that stock until you release the lien on the stock, because you're selling somebody the right to buy it from you at a certain price by a certain date. Until that contract is done and over with, you can't do anything with the stock. Andrea. Well, I bought AA and APA, and it's just moving down, but today was a weird day. All right, Andrea, we'll pull those up because I actually have both of those, Andrea. Sam, Palantir. Oh, my goodness. Don't. All right, hold on a second. Nicholas, what do you think will happen to overall stocks if the war stops in Ukraine? That's a weird question because the stocks that I look at have absolutely nothing to do with the war in Ukraine. Okay, Coca-Cola has nothing to do with the war in Ukraine. Kohl's, they're a clothing store in consumer goods. They've got nothing to do with Ukraine. Okay, if you're talking about a stock that's directly related to what's happening in Ukraine, yeah, maybe. But everything that I'm looking at got nothing to do with it. All right, wait a minute. Maybe Halliburton, but I'm not too worried about it. A1 stake. No, seriously. Fiatcoin goes. I don't even know what Fiatcoin is. I don't do cryptocurrency. I honestly really don't care what happens with the cryptocurrency. Honestly, I don't. Okay, I'm telling you, I don't care. So stop asking the question. Nothing but pre-qualified dividends. Even this S&P 500, don't care about that either. Okay, if it doesn't have consistent profitability, with S&P 500 doesn't. It goes up, it goes down, it goes up, it goes down. No consistency whatsoever. So no, I don't do coins whatsoever because there's no safety there. There's no way to make a consistent profit on a weekly basis with any coins. Unless I want to sit in front of the computer and watch it all day. No, I don't want to do that. I have other things to do with my time. Nicholas, I don't think so. But you already should invest time in understanding them. Yep, you should understand everything you do. And I'm going to agree with you there, Nicholas. Good going. Okay, Nassar, do you use classic analysis or new school rules such as SMC? Somalia Marine Corps? I have no idea what SMC means. Matt, 1% wouldn't you need hundreds of thousands of dollars of capital to even make anything from that? No, not really. Okay, my grandson is 5 years old. Okay, he invests. Now, he doesn't make the returns that I make, well, because I'm not 5 years old. Okay, he started out with 50 bucks. Well, what do you think a 5-year-old's going to do? Okay? But there are stocks that you can trade that have weekly options at $2, $3, $4, $5. To buy 100 shares of a $5 stock is only 500 bucks to get started. Okay, a $3 stock. Oh, I actually have Riley. Riley, hold on, let's pull up Riley. R-I-L-Y. Riley, look at that, $2.80. Okay? $2.80. Yeah, I got a whole bunch of that stuff. But if I bought it at $2.80, I sold somebody the rights to buy it from me at $3, I can pick up 4 cents. Now I know 4 cents doesn't sound like a lot, but 4 cents on a $3 stock is 1.25% for 1 week. 1.25% for a week. That is over, 60% a year? Hold on, let's find out. All right, let's just do one on Riley, because I do have a bunch of Riley. Okay, and next week it's currently at $2.69, so let's do the $3 strike right there. Oh, let's do 100 shares. You're going to be very surprised what 100 shares actually looks like. 32 bucks. That's my profit. Now, that's not a lot of profit, but look at what it's costing me. 268 bucks. Now, before we move on, let's do a little creative math. When I say creative math, I want to find out what the rate of return is going to be. So I get my calculator. If my profit is going to be $32 per contract. That's for one contract, $32. In one contract, cost of the trade, including commissions and fees, $268. If you're investing in the stock market and you don't have $268 to invest, you shouldn't be investing in the stock market. It is what it is. All right, divide that by the cost of the trade plus commission and fees. 268 gives me a grand total of 11.9%. That's freaking crazy. Huh? Is what it is. Okay? You probably won't get 11.9%, but it is what it is. Now, I do own some Riley. And I did take a loss on some Riley, which means sold it for less than I paid for it. Well, I had a margin call. It happens. Don't do margin until you understand the risks involved. That's what I tell everybody. Don't do it unless you understand it. Okay, Matt, 1%. Okay, you already did that question. Hello, I'm from India. Can you show... Okay, interesting. Let's keep on going. Nisar, it seems that you really rely on fundamental analysis to trade stocks. I understood this from the price gaps in the market behind you. Okay. Matador, good evening. A1 Steak. What if the stock price goes to infinity and your stock gets called away? Okay, I'm not quite understanding the question, because a covered call, basically, you buy a stock at a certain price. Great. Now you're selling somebody the option to buy it from you at a certain price by a certain date. So you're saying, hypothetically, if I bought this at $2.80, I sold somebody the rights to buy it from me at $3, picked up 4 cents a share, which is over 1.25%. Great. Now the stock jumps up to 1,000. Well, whoever bought that option has the right to buy it from me at $4, at $3, whenever they want. The difference between what I bought it for and what I sold my rights away for, it's got nothing to do with it. Okay? Somebody has the right, and that's what a covered call is. Do I care if the stock jumps up? No. Because that's not my goal. My goal is a simple, safe, predictable 1%. The way I do that is I buy a good quality stock at a certain price. I sell it to someone else for basically the same price I just paid for it. Do I care if it goes up or down? Not really. I'm looking for the cash flow. Okay, that's it. I'm not looking for the stock price to go up. Okay, and I don't know how many times I need to say that. I'm looking for cash flow. Okay, if I put in $1,000, I want to get 1%, which is $100. If I put in 100,000, I want to get $1,000 back. If I put in $1 million, I want to get $10,000 back every single week. Do I care if the stock jumps up and goes to infinity? No, I don't. Good for that person. That's what they're there for. They're there to keep paying me 1% every single week. Now, 1% every single week is 50% per year. Well, I like that. I'm good for that. Okay, Scott, why do you like Riley when it's not a dividend king type stock? Good question. Now, I buy stocks specifically that are consistently profitable, or they're on Warren Buffett's list, or one of my clients requests me to buy it for them. Okay, that's why we bought some Riley. Okay, smart money concept. Oh, I never heard of that one. Okay, smart money concept. This is a trading strategy used primarily in technical analysis. It's based on the idea of following the smart money. Large institutional investors like banks, hedge funds. Okay. Awesome. Great idea, great plan. I have my way of trading. They have their way of trading. Okay, Anacat. Not confident on my strategy, what to do. Okay. Matt, so you invest in a company and trade their options as well? Yes. Can you give us in a simple breakdown Are you buying options with dividends and or buying the actual stocks or both? Oh, Matt, great question. Give me a second. Gotta loosen up the pipes. I'm not used to talking so much, and that just helps. All right, Matt. All right, hold on. Papa Fawn says, as far as today, what would you say the best usage of $2,000 is right now? Any specific tickers? Okay, Papa Fawns, I have no idea who you are. I have no idea what you're looking for. It would be a disservice for me to tell you anything without knowing more detailed information. Okay? I don't give tips. I don't tell people what to do. So, Matt, for your question, I buy nothing but pre-qualified dividend stocks. Those are companies that are consistently profitable for at least 2 decades per minimum. 2 decades, that's 20 years. Okay? Now, if a company's profitable for more than 2 decades and they have weekly options available, it is a simple strategy of Johnson & Johnson. Why not? Looking at the chart and listening to what the chart is telling me, because buyers and sellers or investors all looking for the same thing. We're looking to make a profit. We don't want to lose. So here's the thing. You can argue all you want, but there's only one high of the year. There's only one low of the year. Okay? Stocks only move in 3 different directions. Okay? Up, down, or flat, which is basically sideways or nowhere. So you have 3 opportunities. Up, down, sideways. Great. What strategy can you make money in all 3? Well, you have the spread. You can make money if the stock goes up, you can make money if the stock goes down, and you can make money if the stock goes nowhere or sideways. But there's a lot more risk and a lot more reward. Well, what is a safer strategy? A safer strategy is buying the stock at the right time and doing a covered call. Because what a covered call is, you're buying a stock, number one, that you like, only the dividend stocks that have consistently been profitable for 2 decades. There's about 300 of them. Now, I check every single week to see how many stocks there are available. This week, 10,036 different companies. Okay, next week it'll probably be more because they keep adding every week. 10,036 companies. Out of those 10,000 companies, only about 300 have consistently been profitable for more than 2 decades. That's 20 consecutive years. That means last year, well, I made more money this year than I did last year. I'm going to make more money next year than I did this year. The year after that, more money. The year after that, more money. So the dividends would look something like this. 5, 7, 11, 18, 23, 27, 30, 35, 36, so on and so forth, consistently higher and higher and higher every single year. That's consistency of profitability. Why you would invest your money in anything other than that is beyond me. Okay? People do it all the time. It boggles my mind. I don't understand it. But hey, there's an ass for every saddle. Okay? That being said, if I'm buying nothing but a pre-qualified dividend stock, selling somebody the right, not the obligation, to buy it from me for the exact same price I paid, paying me a premium every single week of 1% or more, well, that comes to more than 50% per year. 1% a week is more than 50% per year. Do I care if the stock goes up? No. I'm not buying the stock because I want to hold on to it. I'm buying the stock because it is an asset that is producing a cash flow on a weekly basis. That's what I'm looking for. Okay? Cash flow comes from selling something to someone. So, if I like Johnson & Johnson, I want to see what the chart is telling me. It's telling me the high is here, the low is here. The movement is up, down, up, down, up, down, up. That's the movement. I can get my 5-year-old grandson to do the exact same thing. Hey, little buddy, can you do that? Yeah. Bop, 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 bop. There you go, Papa G. 5-year-old can understand that. It's either the right time to buy or not the right time to buy. This right here is not the right time to buy, in my humble opinion. The bottom is here, the top is here. That is ripe for profit taking, because profits are weird. If you do not take your profit, do not be surprised if the market maker takes it away from you, or it just disappears. Okay? High here, now it's down here. This is the time to buy, right here. Profit taking, stock drops, 3 days to the upside. Yeah, that's where I want to jump in. This chart will tell you when is the right time to buy, when is the wrong time to buy. Normally. Can we be surprised? Yeah. It could be in an upward trend and then drop to the floor. It can be. That's part of the game. Okay, and don't think this is not a game. It is. We jump in, we play, we either right or we're wrong, or if you can manipulate the rules in a manner in which you are right more often than you are wrong, that's where consistency comes in. Okay, anytime you hear one of my videos, hey, this is James from Dividend Stock Talk, brought to you by the 10-Minute Trader, where I'm looking for a simple, safe, predictable, consistent, no way to lose trading strategy. Well, it's the trading strategy I gave to my 9-year-old. In 2008, she jumped on my lap and said, Daddy, what are you doing? Can you teach me? Now, this is not a normal conversation to have with a 9-year-old little girl. Daddy, can you teach me what you're doing? Most adults don't understand this. So how do I make it okay for a 9-year-old so she doesn't lose? Because we all know if a 9-year-old little girl starts losing all her money, she's going to cry. It's going to make Daddy feel like shit. Okay, Mama's going to get involved. Daddy's going to be sleeping on the couch. Yeah, it's just not a happy household. So it had to be a simple strategy. It had to be one where she never... Oh, wait a minute. Simple. It had to be safe where she wouldn't lose. Had to be predictable so she knows that she's right more often. Okay? 5 rules. It was what? Simple, safe, predictable, consistent, no way to lose. 5 criteria. That's the criteria that I had to come up with. All right, great. 5 rules. 1. Never buy something you don't understand. If you don't understand it and you don't want to own it for the rest of your life, don't buy it. It's actually that simple. If you look at a Johnson & Johnson and say, I don't know, do I like it? Don't buy it. If you don't like the company, if you don't understand it, if it doesn't make sense, don't buy it. Nobody is forcing you to do anything. You are all adults. Find a good company. Johnson & Johnson's been in business for over 100 years. Great. Buy a good company. Sell a covered call, which means I'm buying it at 153.62. I'm going to sell it at 154. Well, that's the closest strike price there is. It's a safe trade. If it's a safe trade, well, why the hell not do it? I'm looking to get 1% a week. If it's a safe trade, if it's a good company, if it makes sense, fine. Well, what happens if it drops? I don't care. It's a good company. I have no problem holding on to it for the rest of my life. But I will sell a covered call every single week. Every single stock I own, I sell a covered call every single week. Okay, whether it's 1%, 3%, 5%, or 0.5%. I don't care what it is. I want cash flow every single week. Every single position I have, I write a covered call against it every single week. Even when stock dropped like 2 weeks, it will drop. Great, wonderful. I didn't lose any money. I refused to sell at a loss. If I buy it at 153.62 and it drops down to 75, well, I'm going to be selling the 80s or the 85s. It's far enough away where I'm bringing something in, but not close enough for me to lose anything. It's a numbers game. It is a game. Like Monopoly, like Stratego, like Risk, like Scrabble. Any game, once you learn the rules, once you understand what you're doing, it's very simple. Adults have a tendency to make it more complicated than it needs to be. It was created for a 9-year-old. If you can't grasp the concept, maybe this is not a game for you. Sorry. Okay, if your parents been sheltering you, say, hey, buddy, you're just not that bright. Okay, that's your own damn fault. Okay, if you're interested in it, if it makes sense, at some point in time, you all are going to retire. You all are going to be reliant on someone else to take care of your money for you. You got two choices, and only two. Don't let anyone fool you. Don't let anyone lie to you. You take responsibility for your money, invest it yourself, or you give it to someone else. No other way around it. Give me some numbers. 735-1292. There you go. There's some numbers. Not quite sure what you're thinking about, but there you go. What's going on today? All right, we did that. Nicholas, what do you think about Auto Invest bought on Revolut? Never heard of it. And investing bots in general. Okay, Nicholas, I've seen enough of science fiction movies. Okay, 2001: A Space Odyssey. Yeah, it gave me the creeps. The Terminator movies, saw them all. I don't trust computers as far as I can throw them. Sorry, I'm so old school, dude. I write stuff down. I do. Okay, I got a computer right in front of me. I could put it in the computer. Nope, I write it down. Okay, I don't trust anything. Hold on. The stock will give you millions over many years. Thank you, Pete. If I put 10,000 in the stock in the 70s, okay, not quite sure. Give me some numbers. Okay, China or America, your thoughts. Okay, I don't want to do politics. Seriously, I don't. Okay, I live here in America. China's on the other side of the planet. Okay, I have a desire to go there, but I have no desire to go there and deal with the crap. Okay, I want to go see the Wall of China. I want to see some, I want to see some interesting things. I don't want to have to deal with the bureaucrats. I hate bureaucrats. I haven't met a single bureaucrat that I can trust. Matt, okay, it seems like you buy the stock, hold it, and you buy covered calls to cover volatility trades with weeklies. I don't know much about option trading. Okay, number one, okay, I buy quality companies only. Specifically, companies that are consistently profitable. And it's not that difficult to find out if they're consistently profitable. You can read every year, okay, the SEC requires all publicly traded companies to provide quarterly and annual reports because we want to know what's going on in the company. Okay, take a look at it. Is it consistently profitable? Or you can go right to the dividends. Okay, now I don't know if you're old enough to remember Cliff Notes, but instead of reading a 1,000-page book, you can read a Cliff Note in about a half hour. Gives you basically a great idea of what's going on in the book. Same thing with the stock market. An amateur. Hey, Papa Fonz. Okay, I don't know what he's talking about, an amateur. As I was saying, I forget what I was saying. Don't get old. It's no fun. You don't know anything about option trading. If you don't know anything about it, don't do it. Or find someone who does know what to do and go from there. Okay, what's the best way to buy and sell stocks for someone like me? Should I use an online broker, robo-advisor, or financial advisor, a stock app, or direct stock purchasing plan? Wow, that's a lot. Okay, but Papa Fonz, I like the idea that you want to do something. That's great. Most people have no clue. Most people spend more time planning a family barbecue than they do on their personal finances. You have to ask yourself what is important to you. At some point, you're either going to do it yourself or you're going to give it to someone else to do. It's that simple. You do it, someone else does it. There's no other way around it. Okay, it's either you or someone else. But I can guarantee you this, nobody has more interest in your money than you. So if you do it, great. You give it to someone else, hey, that's great too. Matt, you do futures? Great. Matt, I'm going to ask you a question. You do futures? What is your take on the Commitment of Traders report? If you do futures, you should know what the Commitment of Traders report is. Papa Fonz, an amateur. Well, hang around, learn what you can. Pete, CPKCP Railroad. Never heard of it, Pete. I don't invest in things I've never heard of. Okay? Now, if they have been consistently profitable over the last 2 decades, I would know exactly who they are if they have weekly options. If they don't have weekly options and they're not consistently profitable, I have no clue who they are. Most likely going to be a no. Pete, if I put down $1,000 in Kansas City Pacific Railroad, what would that do? It would make you a little bit more broke than you are now. I don't know. All right, CPKCP. All right, let's check this out. CPKCP. CPKCP. It's not a dividend stock. I mean, it's not even a stock, dude. CPKCP. It's not even showing up. Okay, so whatever that is, it's wrong. And $1,000 ain't gonna change your life. How about Target? Ooh, check that out. You can do 4. Cool beans. Target. Well, let's take a look at Target. TGT. Now, Target is a dividend. Look at this. The high is here. The low is here. Okay, down, sideways, down. All right, what's going on here? Maybe, maybe not. Don't know. Let's take a gander. The high of the year was a year ago. That was 170. Okay, we went sideways for 6 months. Big drop here back in November. Okay, the last 3 months. Look at the last 3 months. Down, up, down, up. Okay, what's going on now? All right, last 30 days, right there. Okay, here's the last 30 days. 106 to 108, down to 88. So 108 to 88 is a $20 drop. A $20 drop on a $100 stock is right around 20%. 20% drop, 88, now it's at 92. 88 to 92, that's $4, which is what? 2%, 5%, something like that? Okay, still got a long way to go up. But, do you like Target? What does Target normally do this time of year? Well, this time of year, Target has a tendency to do something. Okay, that is a slight upward trend. Okay, so sideways and going to the upside, yeah, that works great for covered calls and spreads. Well, we're doing a covered call. Buying it at 92, selling it at 92, because right now it's at 92. Let's get out. 92, right there. Whoops, nope, wrong one. Hit the wrong button. I did. 92 right there. One contract of Target at 92. Here it is. Buy one call Target. 17 April 25. That means it's going to expire in 2 days, which is this Thursday at 4 o'clock. The $92 call against the Target stock at the market to open. Okay, 150 is the profit. $9,000 is what it's going to cost. That's for this week. Well, next week is a little larger. So why don't we look at next week? Let's look at next week in a second. Okay, let's get the calculator out. Okay, $150 is the profit. Okay, see it right here? Maximum profit, $150. I know what my profit's going to be before I even do it. Well, that's a part of the predictability. Remember? Simple, safe, predictable, and consistent. All right. 150 is the profit. 9,000 is the investment. 9,050. That gives me a rate of return of 1.65. 1.65 for 2 days. Wednesday and Thursday. The stock has just got to stay above 92 between now and end of business Friday. Well, what's it at now? It's at 92.08. Well, what are the odds and probabilities of it staying where it is or going higher? Either way, I'm buying it at 92. Am I okay with owning Target at 92? And that's a very big question. Never buy something you don't understand or don't want to own long term. But if you are going to buy, what is the possible cash flow you can get from it? Well, 1.65% on a weekly basis. What is that at the end of the year? Well, let's multiply that by 52 because there are 52 weeks in the year. Okay? That's 86%. When is the last time you made 86% in 1 year? Now, this is a long-term investment. Okay? This is your retirement money. This is something you put away and you manage it. That's all you do. You don't take it out unless you're retired like me. If you're retired, yeah, you got to take it out every week to pay bills. If not, just leave it in there. Let it compound. If you don't need the money, why not invest it? Why not put it to work? It takes 10 minutes a day. Pete, if I put, okay, you did that one. CPKC is the railroad that is vowing through Canada to Mexico. It just established a year ago. Well, dude, if it's just a year old, it's an automatic no. When I say 2 decades of profitability, this thing doesn't even fit. Okay, this is nothing more than speculation. And there's nothing wrong with speculation depending on how old you are. I'm 61, going to be 62. Okay, I have no idea if I'm going to be around long enough to take advantage of that type of an investment. Well, you're asking me to take money out of my cash machine, because my cash machine, like 100,000, gives me $1,000 a week. Okay, so what am I supposed to do? Take a big chunk out of that and put it into something that's not going to give me a weekly cash flow? No, it doesn't work that way. Not for me anyway. If it doesn't have options, no. If it doesn't have weekly options, no. If it doesn't have dividends, no. If it hasn't been consistently profitable for 20 years, 2 decades, no. There's 10,036 different companies. What makes this one so special? Not for me, it doesn't, because it's not 20 years old. So it's a no. See? It's a no. Matt, hey James. Pete, it's going to be big. Don't really care. Just like Exxon after disaster. Okay, Pete, I get that. It may be the best thing since sliced bread or since air conditioning. No, it doesn't fit. If I go in the store looking for a pair of boots and it's the nicest pair of boots they have and it's a great price, it don't fit. It don't fit. It's no. Sir, do you like margin facility? I have no idea what margin facility is. Now, do I like margin? Yeah, I like margin. Margin facility? I have no idea what that is. Okay, let's go back over here to TikTok. 11:15. That means no more stocks, nothing but questions and answers. All right, questions and answers. Here we come. Let's get out of this. Let's get out of that. Let's get out of this. Let's go here and let's go there. All right. So no more stocks with just answering questions. Okay. All right, Andrea, you bought Alcoa. So did I. You bought APA, Apache. So did I. And it's just moving down, but today was weird day. Okay. Sam, Palantir. Okay, Sam, I plead to you. Take a look at the consistency of dividend increases that Palantir has. How many years in a row have they increased their dividends to their shareholders? How many years have they been profitable? Kenny, did you miss Oracle? No, we didn't get to Oracle. Sorry. Quantum Antenna, good evening to you. Wasn't Exxon a nice income? Yep. KC and PC coming together is so huge. It is the first time America can came together in a railroad game. Okay. Matt, what is your favorite stock right now, and what is the most profitable stock you made off of this year? It would be the exact same. That would be U.S. Steel. I made a lot of money on U.S. Steel this year and last year. Scotty, as of last Friday and Monday, opening Bank of America has gone up. Did Monday's opening look like a good time to enter? Okay, Scott, if we could look at that tomorrow, that'd be perfect. Can you go over the dividend calendar for the next 2 weeks and explain how you analyze each stock to put on your list? Scott, how about this? Why don't you just join the morning trading group and you'll get to see exactly what I'm trading? Okay? If it's not worth it, cancel it. It's not that much. Okay? Michael, I'm 44 years old and do not have a 401k. I do have 10 grand in an IRA and in a Fidelity account. I'm thinking you're saying Fidelity. Is it too late for me to invest and have enough to retire on? Well, Michael, Deeds Power Wagon. Yes, Deeds Power Wagon. I do have a morning trading group where people join me as I trade. I share 3 accounts. I got 7. I share 3 of them publicly. That means you get to watch as I trade all 3. And it's live on Zoom. So you get to see my screen. You get to see what I'm doing. And you can say, wait a second, James, can you explain that? Well, yeah, I'll explain it. Hey, James, I got a question. Good, I'll answer the question. The value you're getting is way surpasses the amount that you're paying. And I'm not doing it for the money. I'm charging you because you need to make the commitment to yourself. Those who pay attention. Okay? All right, let me finish up over here. Okay, so Michael, here's the thing. Michael, so what would you do on Macy's? I have it $15.83, not paying anything on premiums. We'll do DCA. All right, you can do 4. I would really take a look at where are you in which option are you selling. Because I have Macy's too, and I make a nice premium off of my Macy's every week. Don't mind holding it, just trying to make a little more money on it. Yeah, take a look at what you bought it for. What is the current at the money strike price? Go 2 or 3 strikes out just so that you have an income coming in. Never sell for less than you paid for it, but you already know that. Michael, back to you. All right, Deeds Power Wagon, cool beans. Scott Cook, double cool beans. Michael, you're a guy. I don't know anything about you, okay? But I'm a guy. I tell you what, I could live off of $100 a week. I could live comfortably by myself in a van, traveling the country, seeing the sights. Okay? I have no idea who you are. I have no idea what kind of obligations you have. I have no idea what kind of lifestyle you live. Okay? Do you live in a mansion with a Rolls Royce and a private driver and you need $30,000 a month just to make ends meet? Or do you live in a 1-bedroom efficiency and can live off of $50 a week? I have no idea. So when you say, is it too late for you? Well, it really depends on how you want to live. And if you can invest and make 1% every single week, compounded, and it can double every 14 to 16 months from where you are, as you add money. You know what? As a matter of fact, come back tomorrow night. We'll take a look at the compound interest calculator. Wait, we have time to do it right now. Hold on a second. The 10-minute trader. Here we go. 10-minute trader. Here we go. All right. Compound weekly. Compound interest. Okay, so I'm trading weekly. Here we go. You ready? Was that Pete? No, it wasn't Pete. That was Matt. What's your thought on day trading, pros and cons in general? I don't do day trading. I tried it once ago. You have to sit in front of your computer all day long. You got to have a minimum of $25,000 just to start, and you could be wiped out real quick if you don't know what you're doing. Is it possible to make 100 grand to a half a million? Yeah, but it all depends on what you're starting out with and what's your time frame. I think railroads are a way to go. Pete, I'm not negating what you're saying. You may be right. Okay, I'm 61. So listen closely, because I don't want you to misunderstand what I'm trying to say. I'm retired. I have no desire whatsoever to do a speculative investment. Meaning, if it's not going to pay me every single week, which what you're talking about, it's not. If I'm not going to get cash flow every single week, it's going to be a no. Okay? In my younger days, yeah, I would jump on an opportunity like that. But at this point in time, I have no desire to go back to work. And if I'm not right, if this is not the best thing since sliced bread, then I have to go back to work. No, I have no desire to do that. Okay, I have no qualms whatsoever that my time in the sun has come and gone. Okay, I'm in the last part of my life, my golden years, so to speak, where I sit back, watch the sunrise, watch the sunset, hang out with my grandchildren. That's my goal. My goal is not to go back to work, earn money to make an investment that may or may not pan out. No, if it doesn't pay me weekly, every single week, at least 1%, it's going to be a no. Sorry, you may be great, but is what it is. Pete, I didn't finish up yours. 2 things I've seen in my life that influence me are oil and trains. What else can make me do it? Okay, good. I get it, Pete. I understand. No cap. Same old as always gold, like oil, metal, silver, gold, etc. All right, no cap. I'm going to disagree with you, but all right. All right. So anyway, Matt, as I was saying, Michael. As I was saying, Michael, it's never too late. This right here is called a compound interest calculator. You said you're 44. Great. Let's take it a rough idea. Okay, you're 44. I'm going to make the assumption you got $10,000. All right, so we'll put $10,000 in here. Well, let's say you put in $200 a week. Can you do two? No, let's say $100 a week. $100 a week. Okay. At 44, you should be able to do $100 a week. Should be. Okay. If not, let me know. Now, you ready, Michael? Start out with the 10 grand you have. Put in $100 a week. Now, the trading strategy I'm showing every single night for free. I don't charge anything. Okay, 1% a week. That is the goal. Okay, interest rate 1%. 1%. Okay, whoops. 1%. There we go. Deposit frequency weekly. That means put $100 a week. Okay, 10 years, $100 a week. You ready? Time frame. 10 years, you say. Now, are you ready for this? Michael, you ready? Okay, so let's recap. You're starting out with 10 grand, putting in $100 a week at 1% per week. Okay? 10 years. Are you ready? You ready for this? $3,523,000. $100 a week, starting out with 10 grand. $3,523,000. Now, do you realize 1% a week of $3 million is $30,000 a week? But here's the thing: you got to do it consistently. You got to put in $100 every single week. You got to spend 10 minutes a day doing a safe, simple trading strategy that was created for a 9-year-old. Stop making it complicated. Matt, how do you prevent losses on a stock you are invested in? You don't. Pete, given the current outflow of money, I want to make my kid comfortable. Yep, get that. Matt, right now is the best time to buy weekly to total market or the S&P 500 ETF. Oh, hell no. I don't do S&P 5. Okay, dude. Matt, seriously. Take a look at the numbers for the S&P 500, okay? And then take a look at the SPDR, the ETF. Take a look at the consistency of profitability. Take a look at the current yield. I think the S&P 500, the SPY, I think that's like 0.5% for the year. Seriously, take a look at the numbers. Go to Yahoo Finance. Where's Yahoo Finance? Okay. SPY. SPY. Okay. Matt, are you ready for this? SPY. Matt, are you ready? Right there. See where it says summary? Right? There's summary. I want to see, look at the exact for S&P. Right here. S&P 500 ETF. S&P right there. Each Yahoo Finance. This is not my stuff. Right. This is Yahoo Finance. It is currently $537 per share. Okay. Take a look at this right here. The current yield, 1.28%, 2.8% per year. 1% per year. Look at the current year-to-date daily total return, negative 7.74%. I don't know why you'd possibly think that is a good idea. 1.28% per year. You can put it into a savings account and get 4% a year. Or you can put it into treasury bills and get 5% a year. Why the hell would you put it in the SPY? 1.28? What are you kidding me? Seriously? Papa Franz, what are your thoughts on cryptos? Nope. It's like the wild, wild west. Until you come up or someone comes up with a safe, predictable, consistent way to get income from crypto, no. Until then, no. Crypto's been around for what, 10, 15 years? Stock market's been around for 400. I don't know. 400 years is a hell of a lot better than 10 or 15. Especially my money. Even if you played safer at 0.5% a week, you would make more than the SPDR dividend. Yes, you're absolutely right. All right, I'm going to agree with you. All right, so let's keep over here. You missed Oracle PLTR, Sam. Please check it out. L, thank you for that. L, thank you, L. Thank you, L. Ellie. I know nothing about crypto. Well, it wasn't for you. So tariffs, what do we do? Wait. Okay, Pete, you're concerned about tariffs? Here's a great idea. Stop buying shit from other countries. Buy American. Made in America. Now, Matt, I don't hate crypto. Okay, I love the idea of crypto. It's kind of like the wild, wild west. There are places in the world you can go and you can claim land. Just go there, plop a flag, and go to the county and say, hey, I claim this land as my own. Yeah, have fun with that. Okay? You like that, Perillo? Buy American. Yeah, you don't like the what do you call it? The tariffs? You have a problem with tariffs? Fine. I can guarantee you, products made in the United States don't have tariffs on them. Are you worried about tariffs? Stop buying crap from overseas. Okay? All right. Where did we end up? Yes, we looked at IBM. Yukon, how are you doing? Neil Gordon, how are you doing? Circle Project, GPTY. We'll have to take a look at that one tomorrow. Dawn, good evening to you. Anna, good evening. My question, David? Okay, Dawn, what was your question? Because what I'm seeing, Dawn, is good evening. And the name is James, not David. It's like 5 or 6 people call me David. I don't know why that is. Okay, no cap. Do I like Bitcoin and gold? No, I don't. Okay, now the reason why I don't like Bitcoin is because number one, it's not regulated. Number two, you cannot make weekly profits on it unless you sit in front of the computer and trade it. There's no safety in crypto. Okay, even Bitcoin, there's no safety. I hear stories every single week. Somebody's crypto or somebody's Bitcoin got stolen. Somebody hacked into this, hacked into that. Yeah, no thank you. Gold is nothing but a glorified paperweight for me. Okay, it sits there, it doesn't do anything. You don't gain any cash flow from gold. All right, let's keep on going. What's Mara look like today, Jim J. Moore? Let's check it out tomorrow. Pete, you don't own anything? I own a bunch of stuff if you have taxes. I hate that. So basically, there's no way to own anything. Well, isn't that the agenda, Pete? Own nothing and control everything? Why would I want to own something if I can control it? Think about it. And besides, you don't own anything anyway. Because here's an idea for you, Pete. Okay? Pete, here's a serious question for you. When has the last time you seen a hearse go by with a U-Haul? Do you know what that means, Pete? When's the last time you seen a U-Haul behind our... Never. Because you ain't taking any of that stuff with you. All that money you accumulate, you ain't taking it with you. That new car you got, you ain't taking that. That beachfront property, you ain't taking that either. The cabin in the mountains, that's staying too. You take your dirt nap, you leave everything behind. You own nothing. So, enjoy life. You don't need to own everything to have a good life. Does this car pass the sniff test? Avis? I don't know. I'll have to take a look at that tomorrow. Okay, Papa Fonz, we'll take a look at it tomorrow. It's 11:33. I'm usually out here at 11:30, but I still have some more questions to go. L. Can we ask a question on TikTok? Yeah, you can. Don Palus. Okay, Don, you asked me a question already. I haven't seen it. Okay, I've seen, good evening, my question mark, that's about it. Dawkins, what Delta do you use? Okay, Dawkins, now you're relatively new here, but I'm pretty sure you were here before. Now, Delta, I understand what the Delta is. Okay, it's the movement in relationship between the stock and the option, the relationship between the two. Great. Explain that to a 9-year-old. The trading strategy I'm sharing here for free was specifically the one I created for my 9-year-old daughter. I had no desire whatsoever to explain to her the delta, the gamma, the theta, or any of the implied volatility or anything like that. Simple, safe, predictable, consistent. Delta is more for the experienced trader to justify their picks. For a 9-year-old, if the stock goes up, comes down, goes back up again, that's what they're looking at. That's it. Okay, Black-Eyed Joe, how are you today? Okay, Scott, I finally understood you. Don't buy options, you sell them. And I think others would like to know that. Oh, well, yeah, Scott, I say that every night. Okay, I don't buy, I sell. Because 80% of all options expire worthless. So why would I want to buy it if there's an 80% chance of it to be worthless? Well, if I sell it, there's an 80% chance of being worthless. Well, great. Because in the stock market, you can sell something and then later buy it back. Okay, so let's say I sell an option for $5 and, 5 days later, it's worth $1 or worth 50 cents. Well, I'll buy it back at 50 cents. It's kind of like buying it for 50 cents and selling it for 5. But in the stock market, you're doing it backwards. You're selling first and then buying. When do you actually get the premium? At the end of the week? No, Scott, you get the premium as soon as you sell it. Now, let me give you an example here, because it doesn't take that long to do an example. All right, let's get rid of this. Okay, covered call right there. Right there. Confirm and send. Now, Scott, as soon as I hit this send button, what's going to happen is this order here goes to the market maker and it sits on his desk. If I do a limit order, the market maker can decide whether or not to fill it or whether or not to not fill it. Totally his choice. If I do a market order, he is required by law to fill it instantaneously at the market price. That's why when I'm buying, I'm always doing the market price. So let's change this real quick. From a limit order to a market order, and there you go. Okay, so here it is. You ready? Buy 10 covered calls of Target, 17 April 25. That's this Thursday at the market to open. Okay. My break even is $90.96. Maximum profit $2,000. It's costing me $90,000. So I'm dishing out $90,000 first thing tomorrow morning, 9:30 a.m. $90,000 leaves my account, and now I'm the proud owner of 1,000 shares of Target. Well, I own 1,000 shares of Target, and I sold the rights to someone to buy it from me for the exact same price I just paid for it, and this $2,000 goes into my account instantaneously. So at 9:31, I will have $90,000 invested into Target, and I will have $2,000 in my cash account to do whatever I want with. The premium you collect gets credited to your account the instant it gets filled. Okay? Dow will have to take a look at that tomorrow. No cap, interesting. Glad you like it. Papa Franz, cool beans. Have a good evening, James. You can do. We'll see you tomorrow. Same time, same bat time, same bat channel. Okay, is avoiding F&O is the right choice? F&O. Okay, is that Ford and O Realty or F&O something else? Matt, what is your thoughts on the tread line straight that is on the internet? Okay, Matt, I have no idea what that means. Okay, what is the tread line? Tread line straight. Future of options. Okay, now, no cap, I'm not quite sure I understand that question. Is there, is avoiding future and options the right choice? Okay, no cap, I have no idea what that means. Now, I consider myself a very intelligent person, but futures and options, what thought on? Okay, I have no idea what that means. Can you simplify that question? Ask me the question as if I was a 3-year-old, because it's simpler that way. Because you're making assumptions that I know what you're talking about when I don't. Because I've done a lot of stuff in my life. Okay, I was a lobsterman, I was a fisherman, I was a farmer, I was a framer, I was a contractor, I was a manufacturer. I did a lot of stuff. I was a waiter. Okay, I did a lot of stuff in my days. When you give me little snippets, little words, well, in your mind, they make sense. Well, it's not making sense to me. So can you say it in another way? All right. Treadline strategy. I have no idea what treadline strategy is. Okay, so I've been investing for over 30 years. Okay, now I don't pretend to know everything. I know very little about trading. And the reason why I know very little about trading, and I've been trading for 30 years, well, because I don't look at things that don't directly relate to what I am doing. Okay, Thinkorswim is an awesome trading platform. I know about 2% of what's going on in this trading platform. 2%. 98% of the stuff that's available here, nothing to do with me. I have no desire to find out. Because I come from an age group where if it works, leave it alone. And I tell you what, 1% a week, which is 50% a year, works perfectly fine for me. Now, do I want to get distracted by looking at other things? No, I don't. I keep it simple, I stay focused on what I want, and I don't pay attention to anything behind me or beside me. Because it does nothing but distract me. I would prefer to watch the sunrise, the sunset, watch a chipmunk run up a tree, grab a nut, run down the tree, run back up the tree. I literally spent 4 hours one day sitting in a nice comfortable chair, having a nice leisurely smoke, enjoying a couple of beers, and just watching a chipmunk climb up a tree, climb down the tree with a nut, climb down the tree. 5 minutes later, he climbed up the tree again, back down the tree. He must have did it about 15 or 20 times in that 4-hour period. That I would prefer to do rather than trying to figure out other ways of making money. Sorry. If it works, leave it alone. For me, that's my mantra. It works fine, leave it alone. Okay? Tim Beck's, Walmart. Now, Tim, I actually own some Walmart, so I'd love to take a look at it tomorrow. Let's finish up what we have going on here. So, Matt, I don't know the trend line strategy. Sorry. Keep on going. Okay, Cole, we already looked at EPD tonight. Joe Berman, then, how are you today? Your income is up. Yeah, it's freaking ridiculous. I haven't seen it this high before, ever. But portfolio balance lower because stocks are lower. Absolutely. See, Joe, my income is up. Okay, I'm up over 40% in the first quarter alone. But you're right. My portfolio balance is down. But that doesn't negate the fact that I'm still bringing in 1%. So look at it this way. I get $200,000 in one account. It brings in $2,000 every single week. Now, it's still bringing in $2,000 even though the account itself is lower. But even though the stocks are lower than what I bought them for, I'm still bringing in $2,000, which is still 1% every single week. Is your strategy earn you over 5 figures a year or more? Yeah. No problem. I get what you mean. All right, Matt. I'm about to sign up for KCCP. Pete? Awesome. I have no idea what KCCP is, but if that's what you want to do, hey, it's your thing. Do what you want to do. Stuart, good evening. Tech 88163, good evening. Bill, I'm in at $5 on Riley. Been selling calls and collecting premiums, but it keeps dropping. Thoughts? Bill, I'm in the exact same position with you. However, I'm into Rally at $4.90. So we're in the same place. So I sold this week's 3s. I don't know about you. Wait a minute. In one account, I sold this week's 3. In another account, I sold this week's 350s. Next week, I'm rolling out the 350s also and still bringing in the 1% because I'm in it at 4 and I'm bringing in over 4 every single week. So I know exactly where you're coming from, Bill. M. Mitchell, how are you today? Ellie, good evening, Ellie. Question, please just subscribed. Okay, Ellie, that's not a question. Okay, please just subscribe. It's not a question. Hey, 86 is in the house. CVX, that's Chevron. Okay, Bill, cool beans. Dan, are you in MSTY? Dan, do yourself a favor. Double check the consistency of the profits on MSTY. Seriously, go into any financial website or any dividend website. See how many years has MSTY consistently increased their profits or increased their dividends. Have you looked into leveraged IUL? Cash Flow King, dude, I'm going to ask you a question. Have you looked into leveraged VUL? Everybody wants to talk about IULs, but nobody wants to talk about a VUL. So look at it this way. If I own a corporation that guarantees people 20% per year, and I take that money and I put that money, rather than putting it in an index, putting it into a stock. Now, I understand the whole self-directing thing. You can't really do that. So let's say we separate it. We put 50% of my cash value into a corporation that pays a guaranteed 20% per year. Then you put it into other ones. Let's say a couple ETFs that are getting, 12 to 15% per year? Great. It's a hell of a lot better than IUL, because IULs are averaging anywhere between 6 and 8% per year. Well, if I can guarantee 20% per year, isn't that better? Okay, because you got the safety of the insurance policy. Great, wonderful. Now, rather than an IUL, a VUL is a lot more profitable. Okay, no cap. I I didn't understand futures and options much. I don't know how to say trading for futures and okay, yeah. So for futures, yeah, I don't do futures anymore. I did them years ago. Okay, and I was kind of profitable at it, but it was something I had to watch all the time. Okay, no. Matt, where's your thoughts on increasing your income in the market? So go from 12,000 to where you are now. So how did you do that? Oh, Pete, this is a good eye. Leave his eyes alone. Okay, yeah, well, I'm blind in one eye. Okay, so this one doesn't do what I want it to do, so it does look a little odd. Most of the time, most people see me, I'm outside, I wear glasses. Sunglasses, so you can't see. Here, I don't wear sunglasses inside. So, Matt, yeah, I started out with 12,000 in 2011. That was a long time ago. Okay, so consistency, profitability, and just stick to it. Okay, never buy something you don't want to own long term. Never do something that doesn't make sense. Come up with a strategy. Fixate single-mindedly on the strategy only. That way, you know exactly what you're doing and you're ignoring all the shiny objects. The squirrel syndrome. Squirrel! Okay? So, I can't tell you what to do because I don't know you. I don't know anything about you. But success, it's simple. 3 steps. You ready? Work hard, live right, find something you believe in. That's it. We're all different. Stop comparing yourself to the Joneses. Your neighbor has his own journey. Your aunts, your cousins, your nephews, your nieces, relatives, they all have their own journey. You have your own journey. Don't compare yourself to other people. You compare yourself to you. Okay? Are you better today than you were yesterday? Do you have plans to be better than you are today, tomorrow? Is tomorrow going to be a better day than today? That's the only control you have. Matt, do you have a free book I could get or something? I'm curious. Okay, Matt, you're on YouTube, dude. Okay? Seriously. By the way, until you said something, I didn't know you were blind. I'm not blind. Blind in one eye. Big difference. Someone else said something about my eyes. They always do. Okay, so Matt, you want a free book? Listen closely, Matt. And I don't mean this in a bad way whatsoever. Those who pay attention. If I give you something, what value does it have? Absolutely nothing. Now, I don't need your money. I'm not selling it to you for the money. That's not the point. The point is, if it hurts, you're going to do something about it. If I give it to you, it's just going to be no value to it. So no, I don't. I spent 2.5 hours here. You didn't pay me anything. You asked any question you want, I answered all the questions you had. Okay? Thank you for that, Pete. I appreciate that. Dan, are you and Misty? No. Mark. Okay, cool. Nicholas, good evening, good evening. Cashflow King. Okay, yeah, we just talked about that. Cashflow King. I answered my questions. That would be great. 36 questions. Holy cow, I'm going to be here for a while. What did I just give you? I don't know. Fun day? Question. Don't. Cashflow Kings. He does dividend stocks. Okay. Mary Kay. Join. James, Bruce Yu. Hey, James, 14% off premium after month 1. Holy cow. Following the covered call strategy. Very grateful for your education. Hey, James, I can't wait to see what my Christmas present looks like, dude. Anyway, I'm glad it's working for you, James. Stone Fury. Hey, James, a long time no see. Glad to see you on. Okay, I'm here every night. I'm not telling. I've never been in stocks, but want my $2 make money. How do I start? Oh, I want to make money. All right, well, keep coming back. Keep asking questions. Michael David Robinson. It actually is worth it if you're new or medium experience. Calls on American Airlines. Cool beans, Miguel. No cap. I put my money in textile, silk, cotton companies, and dividends. I am down 66.99%. What do you think about textile, silk, and cotton? Those are commodities. And yeah, I don't do commodities. Sorry. Tucker, don't forget, I'm 56. Okay. Now, Tucker, I don't know if you had a question before that because I don't see anything. Okay, say Miguel calls on American Airlines. Okay. Don't forget to hit the text. All right. All right. Don't forget your 56. Got that one. Scott, you are providing an excellent platform and have enjoyed listening and learning from your experience the last few weeks. Greatly appreciated. Scotty Cook, you have a great day, dude. Okay, I'm here every night, Scott. Andy May, how are you doing today? Daniel Harrington, good evening, good evening. Rafi the man, can you share what you own in the stocks? Okay, Rafi, I got 7 accounts. I'll share one account with you. What do we got here? What do we got? Okay. Okay, Rafi, you see that? Alcoa, Harley Davidson, Kohl's, Macy's, Altria, Riley, and U.S. Steel. Okay. I shared one account with you. I got 7. I only shared 3. I just shared one with you. All right, let's keep on going. If you mind me asking, why are you blind in one eye? Matt, I got stuck with a nail. Nail right in my eye. A U-Haul is behind a vehicle side trailer. Now there's a part. He was over on the left. Okay, let's keep on going. Rafi the man, thank you. Peachtree third wall. Is that we get to talk to each other through? I'm going to say yes. Dang, that sucks. Well, it happens. You know, I was 17 when it happens. I lived a full life without it. Tucker. Tuck is already for 1% per week. All right, Tucker, cool beans. I mean Kingsford Cloud Holdings Limited. Bill, never heard of it. Bill, a U-Haul was behind up a vehicle side trailer. Now here's the part. He was over on the left. Garrett, Oracle just keeps getting cheaper. Okay. Bill, Peter is my best friend from California. Alrighty. Ellie, how much capital you need to start comfortably with 75% loan to value? Ellie, I would need a little bit more information on that one. And is LTV loan to value? Second, how many stocks do you have in general sold to open and percent had you to keep? Okay, Ellie, I usually have between 5 and 8 stocks in each account. Okay, how long do you keep options? 5 days, usually. Nicole, do you ever make an investment based on what a company is doing rather than just the data? No. Good question, Nicole. Good question. Because here's the thing, Nicole. You can look at Pete's Pizza, Sally's Shoes, or Tracy's Triangles. Great. They're new companies. This is what they're doing. Well, wonderful. What have they done in the last 20 years to warrant getting my investments? Okay? So I put my money where I think it's best for me. Okay? I don't tell anybody what to do with their money. You're free to do whatever you want. Okay? It boggles my mind what some people invest in. And there's nothing wrong with it. You know, it's just, hey, if that works for you, great. I have certain rules for where I put my money. And that's what I'm sharing. Okay, now you may think I'm doing it for you. I'm not. I'm doing it for my children and my grandchildren. Because at some point when I go off to the next adventure, the only thing that I'm going to leave behind are recordings of what I do. So hopefully my children and my grandchildren will learn from this. Hi guys, what you doing? All right, anyway. Sweet Den, how are you today? Shaq, thank you, you're welcome. Sam, I came in late. Are you just showing a covered call on verticals, more cash optional? Absolutely, Sam. But Sam, I got to draw the line somewhere. I can't share everything I know. There's just not enough time, and it would lose a lot of people. Okay? Sam, what returns are good for you? Didn't catch them all. 1% per week, Sam. Okay? I'm looking for a consistency of 1% every single week. That gives me over 50% per year. 2,000 a week is over 5 figures. Yeah, it is. 1,000 a week is over 5 figures. Oh, wait a minute. 1,000 a week is not over 5 figures. Okay. Anyway. Sam, please recap your strategy and returns. I'm new here. Okay, Sam, you ready? Here we go. All right, Sam, I'm looking to invest my money into a pre-qualified dividend stock. That is a company that has consistently increased its dividends for more than 2 decades. That's 20 consecutive years, okay? Now, weekly options are a priority because it's the only way that I can get a simple, safe, predictable, consistent 1% per week. 1% a week is over 50% per year. That's what I'm looking to do. Bill, what's a VUL? Is it a company that had 25%, 63% that goes into the sales progress used of their own? No. Bill, we were talking about, me and someone else were talking about IULs. An IUL is an indexed universal life insurance policy. A VUL is a variable universal life insurance policy. Okay, most people that sell IULs have no idea the value of a VUL if you have a good roster of companies and the insurance company will allow you to move money around. Because if the insurance company allows you to move money around without taking any out, and I can get 50% per year on a VUL, along with the tax benefits that come along with it, so I can effectively invest the same dollar twice and get over 100% per year using a VUL as opposed to an IUL. It's a little complicated, a lot of working parts. But if you don't understand what an IUL is, you won't understand what a VUL is. Sam, recap your strategy. Just did that. Repeat that, please. I just did that too. Mo, do you consider support and resistance level when you sell your covered options? Yes, I do. Startup experts, covered calls. Thank you for that, 86. Sam, sorry, not mine. Okay. Are you really a day trader? I'm not a day trader, dude. Day traders sit in front of their computer all day long. I sit in front of my computer for 10 or 15 minutes. That's it. I buy my stocks. Monday, Tuesday, I buy my stocks. Wednesday, Thursday, I usually just look and see what they're doing. Don't usually buy anything on Wednesdays and Thursdays. Bill, what is always have to deal with the point I don't know? All right, Bill, I don't get that one at all. Pete, want to let you know something. I think dying. I'm here. I just want you to MKKK. I have no idea what that means, Pete. Good luck with that. If you only had $1,000, what stock would you invest in? Okay, Matt, I wouldn't. Okay, I take that $1,000 and I'd invest into my own education. Main man, I was playing around with my big boy Victor and I put, okay. Alrighty then. Jay Moore, good night. Have a good night. See you again tomorrow. Okay, cool beans. Nicole, soon a small investment that could be huge gains. Okay, Nicole, I love it when people ask me or give me some advice. However, I would prefer the advice to be at a company that I actually like. Do I have a website? Yes, I do. The 10 Radio. Dave, come right up here to the bio, right? One of my pictures right there. It gives you a link to all my website, all my social media, all that kind of stuff. Are you cross streaming? Yes, I am. I got 6 channels going tonight. Yeah, usually more. I like your stream, but need more detail. Dave, I'm not quite sure what kind of detail you need, because I'm just sharing the information. People ask me questions, I answer. Rafi the man, thanks, you're welcome. Yes, on his profile, thanks 86. Junior, the realist, thank you, Junior. Tucker, I say 56. Because I don't have any playtime, need great advice. All right, Tucker. Ellie, yes, okay. Tracy's yeah, that is a funny one. Hey, look at this, we're done. When do you sell then? I try not to sell. If a stock is consistently giving me 1 to 2% every single week, why would I sell it? It makes no sense. Okay, what's the screen behind you? Target. Stick around and see. That silver guy. Cool. Looking for a good dividend stock. All right, there's a whole bunch of them out there. Any thoughts on BBAI? Never heard of it. Okay, BBAI. Never heard of it. Now, I've been investing for a very long time. If it is consistently profitable, if it has weekly options, I usually know who they are. BBAI, never heard of it. My homie asked if you drink Popov vodka on live. No, I don't. Seems like the algorithm is doing better over there. Yep, could be. Anything that pays monthly. Yeah, there's a whole bunch of stocks that pay monthly that I like. Do I get good fills on TOS? Sometimes yes, sometimes no. Matt, how much money do you pull out of a stock for profit? So I think after I make $25,000, that is my profit. Okay. Verizon and AAT, which one do you prefer? Whichever one looks better. Because no matter what the rate of return is, there is going to be a time where one is better than the other. Thoughts on PLTR? PLTR is not consistently profitable, and they do not have dividends that are consistently making me a happy camper. So I never, ever traded PLTR. Take a look at the numbers. How do we learn your dividend stocks? Okay, you ready? Get a pencil, paper, crayon, mascara. Ready? Here we go. Dividend kings, dividend aristocrats, dividend champions, dividend contenders, and Warren Buffett's list. Those 5 lists right there. Go to Google. In the Google search, Dividend Kings list 2025, Dividend Aristocrats list 2025. The lists are free. Do you make any adjustments to your strategy with tariff volatility? None whatsoever. Have to handle losses. Okay, we are in week number 16. 16 for the year. Week 16 for the year, week 3 for the second quarter. Okay, I have, hold on. I have 7 accounts. I share 3 with you. Okay. Behind me, right here, week 15 of the year, April 7th to April 11th. That's week 15. That was last week. Week 14, the week before. See these right here? Count them. These are all the trades I made. Okay? Every single week, I made all these trades. Okay? Count them if you want. There's a couple hundred of them. Now, out of a couple of hundred trades, I got 2 losses. 2 losses out of every single trade I've made so far this year. You can take it however you want. I'm not here to lose money. I have no desire whatsoever to take a loss. I will roll something forward 2 to 3 weeks and get a 0.5% or 1/4% rather than take a loss. Do I like O? No. O Realty does not fit. It's a monthly optionable stock. It's not 20 years old, and it's not consistently profitable. I don't like O Realty. Can you repeat the 5 categories of dividends? Okay, now, Ellie. Dividend kings, dividend aristocrats, dividend champions, dividend contenders, and then Warren Buffett's list. Okay? Now, that's every single question I answered tonight. That's my main goal, is to answer each and every individual question. I am done for the evening. Peace out. You guys, I'll catch you again tomorrow. Dear live stream, okay, I had this idea. I think I am going to go into work tomorrow and ask them if I can celebrate Bastille Day. Cool beans. Like, what is your profit, as in what you put in your pocket? Okay, Matt, do you see this right here? Okay, weekly trades 2025. Account number 1, account number 2, account number 3. Do you see this right here? Withdraw. Withdraw. Withdrawal. 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 I take money out every single week. Okay? I pay my bill. So Exxon ain't winner. They are to be. I like Exxon. ExxonMobil's a great company, Pete. Okay, I do invest in it when the time is right. Not time right today. Okay, we'll take a look at it tomorrow. IHTC week 1, quarter 1. Is that? Week 1, quarter 1? That's INTC. That's Intel. Intel, right here. Okay? 27. How many did I have? 5, 6, 7. 7 and 9. 16. So 16 times 27, what is that? 16 times 27. 16 times 27 equals $432 off of Intel. Intel, right here. $432. Okay? It's not going to break the bank, but that's just one trade for that week. So there's Riley, Intel, there's another Intel right there. Harley-Davidson, Altria, Intel, MPW, and U.S. Steel. Oh, U.S. Steel is a nice one. Look at that, $1.48. How many was it? 10, 20, 36. 36 times 148. What is 36 times 148? Claire. 36 times 148. That's $5,000 just from U.S. Steel. All right, I can live with that. All right. Seahart, James, appreciate your time. Good night. Ellie, what are the fundamentals you look for in a company? Sorry, most profitable. A repeat question for many. Okay, that was my last question. U.S. Steel. So no railroad stocks, no oil stocks for today? Nope. Sorry, Pete. Bryson, what's up, my brother? And Christ is just coming to check to make sure you are doing well. Okay, I'm wonderful, thank you. Can you give an example of how much you pull out? Matt, I just showed you. Okay, say, Ellie, for you. You ready? Ellie, I have 2 criteria and only 2 criteria. You ready? Hold on. How do you profit weekly from dividend stocks if the share price drops when dividends are released? Well, dude, no name. Number 1, use your name. You know my name. I don't know yours. Kind of rude to ask a question without introducing yourself. Just manners. That's all. Ellie, for you. 2 criteria and only 2 criteria. You ready? Consistency of profitability. 20 years. That's what I'm looking for. 20 years of consistent profitability. 2, weekly options. That's it. Weekly options and consistently profitable. All right. Appreciate the information. Great, wonderful, wonderful, everyone. Have a nice night. I'll see you again tomorrow. Have a great night. 9 o'clock tomorrow. Out of here, out of here, out of here. Have a great night, everyone. And you guys over here, have a great night, and we'll see you again tomorrow. You guys over here, see you again tomorrow. And you guys down here, I'll see you guys again